Hi, I'm Reid Johnson, president and founder of Lake Point Advisory Group. We're very glad that you joined us for our monthly Food for Thought event. Why now is the right time for life insurance? Lake Point Advisory Group, as you know, is a retirement planning and wealth management financial services firm. We usually have discussions centered around investments and retirement and planning or market, but today this topic I think is going to be super timely based on the new tax proposed changes that are going on right now as early as the end of this year. So we believe this information is going to be really helpful and hopefully you'll get a lot out of it. We have a large audience today. Thank you so much for joining. Everybody's camera is turned off and their microphones as well, so we will not be able to hear you. Today we're going to do it a little bit different. We're not going to take questions. We believe that when it comes to this topic, specifically life insurance, this is very situational, and I don't want to actually, if you ask a question and somebody hears the situation to you and they're confused about their situation, we want to make sure that we address your individual situation. So I'm going to ask you for a favor today. Please take out a piece of paper and write down those questions. At the end, I'd love for you to either email myself, the advisor that you work with, Anna, and we'll make sure to answer all those questions as soon as possible. So without that, no further ado, I do want to introduce Anna Apodaca. She's an investment advisor representative with Lake Point Advisory Group. Anna's been in this industry almost as long as I have, a better part of 2 decades. And so we're excited to have her and her experience here today. We're going to jump right in. Well, first of all, how are you doing, Anna?
I'm doing good. Thank you for asking. How are you doing?
I am really good. And I'm excited to go through life insurance because this is a topic that I have a lot of passion on. There are so many things that as it relates to life insurance. You know, most people, when I talk to them or they initially think about life insurance, the first thing that they're thinking about is, okay, this is just money that I'm going to be passing on to beneficiaries and not really understanding the gravity that life insurance has. What are your thoughts kind of on that?
Yeah, I definitely agree with you. I think life insurance, depending on somebody's situation, can offer so many more benefits than just, the value on somebody's life to maybe pay for final expenses. I think there's so many more benefits other than just, paying for those last wishes and expenses. So I'm excited to talk about those things today.
Yeah, me too. Because I think that's what people think of as final expense, something that's going to be left to somebody else. And if you leverage, and I want to make sure we use that word a lot today, is leverage life insurance correctly. If it's part of your financial plan, I think it's so much more than just something that you're leaving as a death benefit. So we'll get into that and talk about how that can affect you. So the topics that we had today, you had a list that we sent out in the email, and we're going to try to hit all of those topics, time allowing today. So the first one that was on there was how much life insurance do you need? And that's a tough one. And realistically, I'm going to tell you, some of you watching this presentation today, there at this Food for Thought, there is no amount of life insurance you need. You might have enough assets that cover you, and you've put a good enough plan in place for tax preparation and estate planning. But it's really going to be individual needs based on the life insurance. And here's some of the things that I would tell you to consider when it comes to if you need life insurance or if you do not need life insurance. The first thing is you've got to go through the financial plan, and you've got to take a look at what is your current situation. Right now, we know the estate tax limit per person is over $11,700,000. I talked earlier, just a few minutes ago, about how tax changes could be coming up as early as this year. And one of the things on the docket is reducing the estate tax to $5 million. I mean, that's less than half of what you can pass on right now. And while that might sound like a lot, depending on your situation, that might not, that you might not have that today, but with proper planning and growth of your estate, that's certainly something that you can possibly go over. So I think that looking at your estate plan or the estate life insurance need is one of those things. The second thing that we see a lot of people having, and Anna, tell me if I'm wrong here, is I would say that most people we see, their biggest asset today is their IRA. And when they are gone, one of the things that we see is that that they have not spent down their IRA based on the financial plan that we put together. Hopefully they've done some planning with one of your advisors and done some Roth conversions, but a lot of people are going to have a substantial IRA left, and we have no idea what future tax rates are going to hold. And when you pass away, your beneficiaries have to pay income tax on the remaining balance of that. And, today we know what the tax rate is. We know exactly what it is. We know if we pass it, here's the marginal tax rate. We don't know what that's going to look like in the future. And historically speaking, tax rates are low right now. So life insurance can be leveraged not just for estate taxes, but for taxes on those substantial IRAs. And then you got to think about things like, how long are you going to live? What if somebody passes away too soon? What if they live too long? Those are all of the things that we need to be putting into a financial plan. So there's so many different variables. I can't just say, hey, here's how much life insurance that you have. I mean, what are your thoughts, Anna? Is there anything that I'm missing there that you thought about?
Yeah, so I thought that was fantastic. So one of the things that comes to mind when I'm sitting down in a planning session with, the families that I work with is, you mentioned IRAs. That's sometimes one of the largest assets that they hold. But what I find as well is there's property that they have in their name, whether it's property that's generational property that's been passed down from generation to generation, or even the home that they live in that's, really, it's grown substantially in the last 5 years from where they purchased it. So one of the items and one of the things I like to do in leveraging insurance to help pay for some of those costs is really, you don't want the people who are inheriting that property to basically go out and, get the first price out there. You want them to, to be very good stewards of that property and get, you want them to get the top dollar for that property. So in some situations I've seen, families inherit property and they need to pay down that estate tax that you were talking about, around that 11.7 million. They need to pay taxes. They need to pay creditors, whatever the case may be, and they're in need of that cash, and they go out and they sell the property because they need to liquidate positions. And that's something that you don't want to do, especially if the market, right now the market's very favorable when it comes to property, but we don't have that crystal ball, and we don't know if it's going to continue being favorable in the future.
I'm glad you brought up life insurance, because that makes me think of two things. Number one is, we never know when that bubble is going to happen, and we don't want to have to be forced to sell property. Like let's say it's 20 years down the road, your value of your property is appreciated, estate taxes have gone down, and then all of a sudden, your beneficiaries get a bunch of property, and either your main house or multiple properties, and then the market's down at that point. I mean, if they have to pay taxes, the tax man's due, and they're going to have to be forced to sell money. That life insurance benefit, as we know, is tax-free. And so that cash can be very valuable to those people, especially when it comes to taxes on property, estate taxes, and those IRA taxes. That's a great point. What type of life insurance policies are there, Anna? I mean, this is kind of a loaded question, I think.
There's probably thousands. I'm kidding. No, so there's actually, when I think of life insurance, I think of really two types. There's the permanent life insurance, and then there's temporary life insurance. And really the titling of the two is just as it's exactly that. So with permanent life insurance, as long as you're continuing to make those premiums, and as long as you're continuing to pay the insurance company, you're going to be made whole if something were to happen to you. With temporary life insurance, obviously it's to a set date. So maybe it's until you turn 80. The issue with some of those policies is if you live to 90 or even 100 years old and you have a policy that's only in force till you're 80, you've paid all those premiums in and you don't get anything in return. So those are the two basic. There's a lot that are in between the permanent and the temporary insurance. But at a high level, it is a loaded question. At a high level, I would say those are the two main differences on the types of policies that are out there.
Okay. And, one of the things that I think about when we're talking about the types of life insurance is, I mean, you can also add things like there's cash accumulation. I always tell people it's kind of like what you said, there's renting insurance, and then there's buying insurance. And then some of them have cash accumulation. Some of them are just designed to be there for your whole life, as long as you pay the premium, as you mentioned. And so there's multiple different variables on the type of life insurance and why you should have them. Again, I can't say this enough inside this presentation, is you've got to look at the financial plan to determine what what type of life insurance. Life insurance is a tool. It is not just a death benefit for a beneficiary. If it is leveraged and structured properly as part of your financial plan, you can do a lot of great things, as we're going to talk about here throughout this food for thought. So a couple of things that we put on as questions below that is what you need to know about life insurance if you already have a policy. I'm going to tell you the first thing that I think of is getting it evaluated, getting an in-force illustration or an in-force policy ledger. The reason that I say to do this is because I talk with a lot of folks, and I'll kind of give you 3 different scenarios that I've seen. Number one is I have somebody who thinks that they have permanent insurance, but in fact they have term insurance. And nothing is worse than seeing somebody over the last 20 years, and I'm sure you've seen the same situation, where somebody just thought that they had life insurance, and then they come in, or a spouse comes in and they look at this and it was term insurance, and if somebody gets chronically ill and maybe it's not something that's going to have them leave this earth right now, but maybe in the near future, but that thing runs out. And then when you get to those levels, some of them don't even allow you to make additional premiums. The policy's over, or you have to medically qualify. Some of them are going to have premiums so astronomical. I mean, it literally is almost the value of the policy, right? So you got to be really careful about term insurance and understand how that works, and look at it to your financial plan. Maybe you only need term insurance for X amount of time until a home's paid off, or until a kid's out of college, or to a certain age, and then you've saved enough money. But the financial plan will tell you. But make sure you have that evaluated. The second thing is that I see a lot of folks with whole life insurance. Great plans. They grow really well. I've seen some great mutual whole life policies that are out there, and those mutual companies have done really well. The cash value has grown, death benefits grown. But what a lot of people don't realize is that you don't get the cash value and the death benefit when you're gone. It's just the greater of the two. So sometimes you can take those existing whole life policies and convert them. Life insurance is actually cheaper to get today and easier to get today in some cases, because people are now living longer, so those mortality ages are going up. And so you might be able to get life insurance that's a little bit less than it was before. And depending on your situation, maybe you don't need that cash value. And since you don't have cash value, you can use that to get a way higher death benefit. And if death benefit's what you need for that tax situation, or in case you live too long or pass away too early, it's really important to get those policies evaluated. I can't tell you how many times I've seen somebody that they actually were able to leverage the life policy they had and got a lot of additional insurance. So please let us evaluate those, or get it evaluated somewhere. And then the third piece would be is that I have somebody who took a loan on a life insurance policy and didn't have it pay it back, and didn't understand they called the insurance company and they said, hey, yeah, you can take a loan on this, but they didn't explain to them how that was going to erode the actual money in that policy because it wasn't structured properly. Get it evaluated, lower the death benefit. There's a lot of things you can do when you take a loan to keep that policy in the force, keep that money that you pulled out tax-free, and keep that policy in good standing. So those are kind of the things I would say that you need to know about, if you already have life insurance, what you need to do. All right, next topic, and I'm gonna give you this one, Anna. What you need to understand about life insurance that is much more than a death benefit. So we talked about that at the beginning. So what are your thoughts on that?
Yeah, so when I think of life insurance, obviously everybody thinks about the death benefit and what your beneficiaries of that policy are going to receive. But what a lot of people don't realize is, especially with the insurance contracts that we write here at Lake Point, what a lot of people don't realize is there's actually living benefits that are associated with a lot of contracts that are out there. For example, if you have a chronic illness, or if you have a terminal illness, you can accelerate some of the cash value and use that death benefit to your advantage to be able to pay for maybe an assisted living facility if you're not able to perform certain activities at home and you need to access that cash value. One of the things that we do in our planning process, and Reid, I heard you say it probably 4, 5, 6 times at this point, it's going to depend, right? So if you have a history of or somebody who's actually gone into a long-term care facility, one of the things that is those can be very costly, and it can erode your assets pretty substantially. They're upwards of $10,000 a month. So being able to access your death benefit by accelerating some of that cash value is going to be very, very important. And a lot of clients actually don't realize that they can actually access that. So those are just some of the things that kind of stand out to me. You mentioned loans, and you actually mentioned accessing tax-free income. That's something that I think we're going to be talking about a little bit later, as we talk about, why you purchase life insurance and the different types of life insurance that are out there and why you might do it for certain situations. But, a lot of people don't know that you can have tax-free benefits come from a life insurance policy versus, going the Roth conversion route. So I know we talk about that.
I think that's good. So a couple points that I got in there, and I definitely want to hit on one. And I use life insurance a lot. And when I say that, leverage it a lot. There's what we call asset-based long-term care planning, and asset-based long-term care planning is structured in a couple of different ways. One of those ways in asset-based long-term care planning is just using your own assets, right? You have enough money, you looked at the financial plan, you've predetermined and tested, hey, if I need it 1 year, 3 years, 5 years, if me and my spouse both need it, you've really gone through and tested both of those scenarios. But another thing to look at is how could a life insurance policy that maybe has a benefit for tax planning purposes, but also has a benefit for in the event that I need long-term care, because as you mentioned, some of these policies, not only will they give you sometimes 5% of the value on a monthly basis, 5% of the death benefit for long-term care needs that are tax-free benefits to pay. That could be really, really valuable as part of the planning. Another thing that I think about is, if you have some of the different life insurance plans that are there, if you buy them, maybe it has one death benefit, but if you need it for long-term care, it has a multiplier that does 2 or 3 times what the death benefit is for long-term care, depending on your situation. So yeah, life insurance absolutely, I think, are important to utilize, not just for the taxes, but for the long-term care. That's a great point. I'm glad you brought that up. The next thing we had on the topics was how to increase the death benefit that you already have. I kind of alluded to this, but I want to really kind of maybe dive into this a little bit deeper. So imagine that you have a life insurance policy, and I'm just going to make up a number, and it's $100,000 of death benefit. And let's say that it's paid up with a $40,000 of cash value. Now, that cash value, depending on your policy, if it's one of those good mutual companies I talked about, that cash value might be growing incrementally, but that death benefit stays the same. One of the things that sometimes you can do, depending on how good your health is and depending on and how much death benefit you're trying to get, sometimes you're able to take that cash value that's grown tax-free and roll it over through what's called a 1035 exchange. It's a like-to-like insurance policy, and take that $40,000 and leverage it up and buy a new paid-up policy that might have 130 or 170 or 200, depending on your age and your health. So I think that if you have an existing life insurance policy, if you understand that if you need that cash value, that's not something you want to do, because that cash value is not going to grow the same way when you increase the death benefit. But if you truly have that policy in place for a death benefit and you're not trying to focus on that cash value, leveraging that up and increasing that death benefit, I think, can be very, very strong for increasing not just your net worth, but giving you more, your beneficiaries, more options when it comes to taxes. Because I'm going to tell you guys right now, everybody has a beneficiary. It's either their loved ones, their charities, or Uncle Sam. And I think that going through this process and really talking with your advisor and plugging it into the financial plan and seeing what you need is going to be really instrumental for you guys, making sure Uncle Sam is not an unknown beneficiary in your policy. So let's go ahead and kind of move into strategies to cover the debt load of taxes to your beneficiaries. So, we've talked a lot about, that's one of the things we talked about, long-term care. Let's really talk about strategies now. What strategies have you seen that you've seen with families you've been working with over the last 2 decades that have helped folks when it comes to preparing their beneficiaries to offload that debt of taxes?
Sure. No, that's a great question. So, many of you all are probably familiar on how life insurance is taxed, and it's not. Life insurance, if it's done properly and structured properly, it's going to pass on to your beneficiaries tax-free. However, Reid, you did mention earlier in the presentation that, right now the federal estate tax is set to about 11.7 million per person. Married couple, you multiply that by 2. But right now there's a 881-page bill that's sitting on Congress right now, and they're talking about potentially lowering that federal estate tax to 5 million. And in working with a lot of families, I find that there's a lot of families that actually are going to exceed that. So if you have an estate in excess of 10 million, anything over that amount is going to be taxable. And we're not, and this is a substantial tax. It's about 40% of anything over that $10 million limit that would be taxable to your heirs, whoever's inheriting that. One of the strategies that we've really found that works to help with that debt load is structuring what's called an irrevocable life insurance trust, and actually placing the life insurance into that trust. And what it does is it basically goes around, and it doesn't include it in what's called your gross estate. So what's in that trust, that irrevocable life insurance trust, the life insurance is basically tax-free to your beneficiaries, so that they can offload some of that debt if you do and are dealing with an estate that's in excess of 10 million, if they do lower that federal estate tax. So right now it may not be a problem for many families, but in the future, which is we're always planning for the future, we're definitely seeing that a lot of people are going to basically be impacted and affected by that. And this is one of the strategies that we've basically been working with our families on.
Yeah, and I think that, you mentioned $5 million, which is in this new bill, but I think it's really likely that we could even possibly see lower estate taxes in the future as well. I mean, for the last, 10 years, we haven't seen very many people concerned about estate taxes because it's just infinitely been going up. I mean, it was infinite, a few years back, that you could pass on everything. That was the year George Steinbrenner passed away. Who you don't own the Yankees, so it's like that was a good year to be able to do that. But if you think back to 1999, 2000, 2001, the state tax limits were $600,000. So with a national debt that continues to increase, and we've all heard about this new debt limit that they're trying to increase, and if they don't, what's going to happen? The tax man's coming, and so I think that it's really important to think about life insurance as an asset class on its own that you can leverage to pay for things like estate taxes. And maybe they're not relevant now, but we don't know what it's going to look like 10, 20 years from now. And remember, when it comes to life insurance is not something that everybody can get. It's something that you have to medically qualify for. I can't tell you how many times I've had families I've worked with who knew that they needed to leverage life insurance, and they were heartbroken because we couldn't qualify for them for that. If you ask me the right time to look at life insurance, it's today, because we never know what tomorrow brings. And I mean, we're in a whole new world with a pandemic going on and different health conditions that are coming up. I think that utilizing this asset class is really important. So a strategy for offloading debt for beneficiaries, I think, is absolutely correct when you mentioned, using an irrevocable life insurance trust. And just to kind of add to that a little bit, the way that I always tell people to think about it is it's a whole separate entity. So if that estate tax is 5 million, let's just say that's what it is, and that's the total you can pass on, and you have $5 million. If you have an irrevocable living ILIT, an irrevocable life insurance trust, and it's structured properly, that is excluded from your actual estate. So with proper planning, you can actually pass on more. Now, life insurance is not the only strategy. I want to make sure that we give fair comparisons here. There are gifting strategies that we can talk to you about versus getting life insurance. There is, taking advantage of your lifetime exemption strategies that we can take a look at, and definitely different type of trust structures. Life insurance is just one of those things that I think about for someone like myself who likes to stay in control of my assets, but wants to have a plan. So I'm not like, hey, I'm not giving away everything right now because I want to make sure that I have enough for myself. But I also want to have a plan that Uncle Sam's not going to get any more, any unnecessary tax, and that life insurance can help offset that. And I think that's really what that's for. So I think that's a great point. Next would be learn what a Roth IRA conversion might have to do with life insurance, or I've seen this all over, and I've seen it on Facebook. I've seen it, a lot of advisors talking about, life insurance and Roth IRAs or Roth IRA conversions. What is that? What is kind of the similarity, or what do you see going on there?
Yeah, I agree. Advisors, I see a lot of things on, Facebook and all of that about Roth conversions. It's a very, very, very well talked about topic in today, especially this year. So as many of you know, Roth conversions or Roth accounts have very, very distinct advantages. So one of the advantages to having a Roth IRA is being able to pass it to your beneficiaries tax-free. Another advantage of having a Roth IRA is if you're in retirement and need to start taking those distributions, you're able to allow it to grow over time. And then when you need that money, you don't have to pay taxes on it. So it's got some very, very distinct advantages to it. However, that's not the only planning tool that we use as advisors. One of the things that, I'll probably give you guys an example here in just a second, but one of the distinct advantages of using life insurance to help plan for somebody's retirement in the future is it's one of the biggest benefits that I think isn't talked about a lot. So I'll take a little bit of a step back here. So I'm going to kind of reference some of these potential tax changes because I think it's important, and I think it's going to be important to kind of showcase that, because there's so many changes right now going on, especially that are going to affect the tax situation. So with Roth conversions, right now, you can do what's called a backdoor Roth IRA if you're over the income thresholds. So if you make over, let's just say $450,000, you're not able to make a contribution to a Roth IRA. But what many people do is they put it into a regular IRA and then they immediately convert it into a Roth IRA to take advantage of that tax break. They're talking about eliminating that altogether. So they're starting to eliminate a lot of the tax breaks in the future. So one of the things, and I'll give you guys an example, one of the things, there's something called an IUL, it's called an Index Universal Life Insurance Policy. And we use this with business owners, we use this with families that are high income earners and need that tax-free income in retirement, because maybe they're selling a business in the future. Maybe they have a ton of property and they're going to generate a ton of income and they're going to be in a higher tax bracket in retirement years. Maybe they have large 401ks that are in excess of $5 million, and those required minimum distributions are going to be very substantial, and they're going to have a very similar tax situation in their working years, in their retirement years. So one of the things that we can do through an IUL, an Index Universal Life Insurance Policy, is we can make monthly premiums and allow those assets to grow over a period of time. And in the future, we can actually access the cash value tax-free. And so that's, again, this is probably one of the least talked about, I'd call it tax planning, retirement planning, that's not really talked a whole lot about, but the benefits are tremendous. And a case that I recently did, I was working with a family. He has a large business, and he knows that in the future he's going to be selling that business to his family to take over the business, and he's going to be receiving large payments, and that he's going to continue having large income in the future. So the business can't be the only retirement plan. If something happens to that individual or that family before then, what happens? What happens to the income? So this is a really great way to kind of structure tax-free income in the future by basically making installment payments today.
Yeah, I've utilized a lot of those plans for families I've worked with as well. And a lot of people, I like that you mentioned high net worth, because it is something that high net worths use because of the disadvantage of making that income and the limitations that they have for being able to contribute. But I do think that there is use for IUL in everyday people that are not high net worth. And I'll give a couple of examples that I've used. So first and foremost, just to kind of recap on what Anna talked about, you can structure a life insurance in such a way that you basically think about you're using the chassis of a life insurance policy, right? And this has been a loophole that people have been using for decades now. And you buy the minimum amount of death benefit, and then you put the maximum amount of cash value in that still allows it to be called a life insurance policy, right? This life insurance, that the cash value then grows. And if you structure basically there's a loaning provision that you do not have to pay back if it's structured properly, and you take loans out of this, and those loans are tax free. And as long as that policy stays in force, again, being structured properly, then there will be no taxes on that. We've seen a lot of grandparents use these type of plans for grandchildren, because think of the cost of life insurance when they're that young. I mean, it's just minuscule for that. And so they're overfunding this life plan, and then they're finding ways to create sometimes tax-free income for for college, or sometimes it's been for weddings. I've seen it done for a lot of things. But I've also had people use this who maybe are later in life and haven't planned enough for their retirement. And they're thinking, hey, Reid, I'm kind of behind the eight ball. I'm maximizing my 401k contributions. What can I do for that Roth, plan as well? Because, we're limited to those contributions and how much we can put in. Using this type of plan for those people who are maxing out contributions and they're trying to catch up and are really concerned, like I am, about future tax rates, they can use those to basically get a tax-free income. Now, it's really important. This is not for everybody. I want to make sure that we're fair on that. I mean, some people help medically, they're not going to qualify. Some people, depending on the different type of pension plans that they have, that might be better. But I would absolutely encourage you to take get on the phone with us. Let us go through your financial plan, see if something like that is indeed a fit for you and your situation. And if it is, we'll show you how to basically implement that inside your financial plan. So that was the topics we had for today. I'm kind of in closing. I just want to say this about life insurance. It can be really confusing. I don't want you to go away today. If I made one thing really good or clear, is that it's not about just passing on something for death. You can utilize life insurance while you're alive for income, tax-free income. You can utilize it for long-term care planning, and certainly we can use it to make sure Uncle Sam's not one of those unnecessary beneficiaries or unplanned beneficiaries in our plan. So again, life insurance is not a one-size-fits-all. You really need to look at your financial plan. If I haven't kind of drove that in hard enough today, to determine when and why and how much money you might need to leverage life insurance. If you need more information, please reach out to myself, Anna, your advisor. We'll be more than happy to go through this stuff with you. I want to make sure you can always reach us on these questions or anything else in the future at 214-771-3363. Thank you so much for being part of this discussion today. We look forward to seeing you at our next Food for Thought. I hope you all have a great day. Thanks.